The U.S. Federal Reserve kept its interest rates on hold for this month, a move that was widely expected ahead of the country's presidential election next week. However, the Fed did set the stage for pulling the trigger in December as the economy has been gaining momentum. For details, let's turn to our Kim Min-ji.
The U.S. Federal Reserve stayed pat on interest rates for November. After a two-day meeting, the rate-setting committee decided to wait for further evidence of continued progress towards its objectives. The move was widely expected with less than a week before the presidential election. The Fed, however, did signal a possible rate hike in December. It said the U.S. economy had gained steam, job creation remained solid, and that policymakers were more confident that inflation was nearing their 2% target. The Fed added the case for increased borrowing costs continued to strengthen, meaning action could be taken when the committee gathers next month for its final meeting of the year.
It seemed very much that they are still guiding us to December, thinking that a rate increase will occur then, another 25 basis points, the same as last December. And the commentary in the release did indicate they're still thinking that way.
But this could be a headache for emerging markets, including Korea, as it could trigger a massive capital outflow. The Bank of Korea has two more monetary policy meetings this year, and a potential U.S. rate hike would mean less room for Korea to change its monetary policy, which currently stands at a record low of 1.25%.
The BOK isn't really in a situation to lower rates, given the nation's high household debt and overheated real estate market, and a rate cut runs opposite to the U.S. policy. It's not in a position to follow suit either, as existing economic conditions don't look robust enough to handle higher rates given uncertainties Korea faces.
The general consensus is that the Bank of Korea is expected to keep its rate on hold for this year, although some experts cautiously predict a rate cut early next year should fourth-quarter growth rate fall short of expectations. Kim Min-ji, Arirang News.